Hey, welcome to Mortgage Minute for August 1st. This is an interesting day because I'm going to talk about housing bubbles and housing prices and interest rates. It's the day that I'm actually taking possession of our new home, so I'm going to put my money where the mouth is today because look at the headlines that have come out over the past few weeks. Specifically, these are Vancouver papers. Home sales and prices are cooling off. House prices at the tipping point. Okay, and of course their underlying one here, Vancouver Realtor actually came out and said, it's time to cash out. Basically saying, sales are taking a plunge, watch for prices to drop. So in that environment, I go into a multiple bid offer and buy a new house, and we're moving in today. If I keep reading these headlines, I should be freaking out right now. But I'm not, and I'll explain to you why in a minute. Here's one that says, wary buyers cool Toronto condo sales. Housing bubbles are messy and unpredictable. Potential buyers should exercise caution and not rush in, particularly in hot markets like Vancouver and Toronto. So why am I not worried about this? Well, let me explain. I want some perspective here. If you're buying a house for your principal residence and it's the house that you want, then you know what? The price within reason, if you can afford it and your budget can handle it, what happens the day after after you buy, what happens to the prices the next day are largely irrelevant, as long as you can continue to have your job and continue to afford it. If you're buying a rental property, it's a little bit different. I would be much more cautious on rental properties, and if I'm looking at these headlines, I certainly would not get into speculative house flipping in markets like Vancouver. Having said that, no Toronto condo boom according to the Royal Bank. So again, conflicting headlines there. A lot of this is attached to interest rates. Ben Bernanke in the United States is hinting that a stimulus is going to be needed in the United States, which brings us back to Mark Carney suggesting in his latest rate announcement where they decided not to change rates, there's actually a hint that they may even drop rates. And again, the usual suspects. The domestic picture is weakening because of the global background, and a lot of this is going to play itself out in the next few years. One of the things that's really important in all this is the Bank of Canada came out with new lending rules. Sorry, not Bank of Canada, Ottawa changed the lending rules. We've already talked about that in the past. One of the things that's really important to watch for here is the banks are getting less business because of the rules of taking out some of the first-time home buyers out of the market by having only 25-year amortizations. When banks slow down in their business, they'll look to stimulate buyers and bring them back into the market. Look for a small drop in rates. So rather than seeing rate increases, all this housing bubble talk is predicated on rate increases. The rule changes are going to create a scenario where the banks are going to lower rates to draw you back in the market. So that is a very interesting dynamic. So watch for that in the upcoming days, weeks, months. And finally, the last thing I want to talk about is first-line mortgages. If you have a first-line mortgage, as of yesterday, first-line mortgage is no longer in business, no longer operating. All those of you who have first-line mortgages, please send me an email if you want questions answered on your specific scenario. But here's the general answer. CIBC is basically going to adopt all existing first-line mortgages, and as such, when your mortgage comes up for renewal, you will get an offer from CIBC. My recommendation is you call us first, ask us to compare what CIBC is offering you, and we can shop around the market to help you get the best rate and or product to suit your needs. And folks, that is the Mortgage Minute for August 1st. I hope you're enjoying your summer, and as always, go to peterkinch.com for more information. Thanks, and have a great summer.